What's up, guys? Bill here. Welcome back to another Watchlist walkthrough where I go through some of the stocks I was watching into this week and some of the trades I took today and just talk about why I took them, what I was looking for, and how I executed. Coming into this week, I was a little bit, kind of going to ease into the week because I figured with CPI on Wednesday, we might be in for some limited range chop on the broader market. And that is kind of what we got with SPY having a sub $3 range. But I was fortunate enough to be watching a couple things that moved really well, and using a couple of my tried and true setups to make, almost my entire week's goal just today. So we're going to dive into all those setups. We're going to start here with AFRM, okay? The whole market gapped up today, right? And I was watching AFRM as a peg into a bear flag, into an inside day, under a weekly pivot, okay? We gap over the weekly pivot, so this becomes a gap and go candidate for me, on top of the setup that I already liked. Now, there's a distinction to be made with stocks gapping. Not every stock that gaps up or down is a good candidate for continuation, the gap and the go. What I look for is gaps over major levels. So one of those major levels could just be a daily or weekly resistance that's been tested before and shown to have strength. So if we look here, this is a weekly high as well, this daily, this big reject, and this big fade off this level. And then the last several days consolidating right under it. You get a gap over a level like that, it gives me more confidence of potentially a nice push off the open and definitely looking for a retest and a bounce off of it as well. Other levels you can look for are like 52-week highs, all-time highs. If you're an inside week or inside month setup and it gaps up over that breakout, those are the types of trades you're going to want to look for continuation on gaps and goes. So the first thing I did today, and it was just a small win, but we can talk about it anyway, is I played the gap and go AFRM setup. So we open here. My main focus is where do you enter? I wanted to see a push through pre-market high, this light blue line. We get that. I slap some calls. We get a nice pump up. This orange line is opening range high. That's not there yet. This is a post-day chart. Opening range isn't established for me until the first 15 minutes. Some people play 30. So my target was 2350. So I scaled a bunch right here. Now, I'm not going to manage an opening day trade the same way I manage a trade that I take maybe an hour into the day. This is more volatile. This is less, you can't be as patient, right? You can go from up 30% to down 30% in the blink of an eye, especially on a stock like AFRM that's a high beta stock, kind of a weird mover sometimes, all right? So at 2350, which I kind of consider a psych level on a cheap stock like AFRM, every whole $1.50 increment can be considered that on a stock this price. I'm scaling heavy, half my position, okay? And then I'm just looking to see if we can get some type of consolidation or maybe support forms. We come down here, we quickly test pre-market high again and bounce back up, and then we close an inside bar candle on the 5-minute on super low volume, big volume on the green candle, super small volume on the red candle. So I'm still watching, and we end up getting one more stick up right back to that 2350 again at that time, almost high a day. And I'm taking more profits there. And at that point, I'm mostly out of the position. Anytime we're starting to retest highs, I like to take, or any, major level that we rejected earlier, I like to take profits and not look back. And at this point, I'm out, 90% of the position. I set a break-even stop, and I get stopped out on this candle coming down through here. Then I didn't trade AFRM on the retest because I had already moved on to a few other trades that we'll talk about later. But my second ideal entry, if I wasn't going to play the gap and go, was the retest of the major breakout levels. So we see here on the 5, we closed below it, but immediately we jump back over it. And, this isn't a perfect place to enter. Ideally, I would have liked maybe one more retest and then you get the bounce. But if you're really bullish on a stock and you see something like this with the sell-off and the regain, that's a good time to jump in. And also, the only other thing I didn't really like about the reclaim of the level was it was pretty low volume. And there was some weird volume stuff going on with AFRM all day, like this big red candle that they just doesn't matter. Like, it looks like maybe they're selling off. Yeah, there's a little wick to the downside, but not much. and they just buy it up. So, some of these, cheaper stocks, the volume patterns might not be as reliable as they would be if you're watching SPY Qs or bigger names like Tesla, Nvidia, Apple, stuff like that. But if you, wanted to play somewhere around this level without insane precision, you got a really nice move, over $1 move to end the day. So just a really nice setup there on AFRM. And after I was trading AFRM, what I noticed was Amazon strength. So all day I'm watching SPY and Qs, right? And, SPY off the open, it had one little stick in it and it started testing that bear gap, that first bear gap, and it kind of wicked and faded. And while it was fading, Amazon was pretty much bull flagging, right? It had one little candle sell off, and then it bought right back up, and it was trading around this 140 negative gamma, which is a major level and psych. And I noted in the room that I was watching Amazon for relative strength. So SPY started selling off with 3 straight pretty decent sized red candles, and Amazon was at least hanging tough, if not going back up and testing this level. So what I was ideally looking for was SPY to try to find some type of little bit of a bottom, at least for a little bit, and some consolidation to give me confidence that I could play this relative strength name on Amazon. And where I ended up entering was, once we confirmed this opening range high breakout, we pulled back and we tested the 140 GEX and Psych with confluence of the 5-minute 9 EMA. So I entered right here. Now, this is an opening range, technically a failed breakdown on the 5-minute, but that doesn't bother me that much because of the relative strength and the fact that we have the 9 here. Okay, so instead of trying to play the opening range high retest and then getting stopped here for a tiny loss, I'm looking to play the bigger level with the confluence of the EMA, and that's where I'm getting in. And this is the trade that made my day, if you can't tell. Essentially, got the perfect entry. I'm scaling here at high a day test, and then we're just letting it work. And you can see that it held the EMAs all day. Okay, so I had some, scale targets in mind. My end goal was this 143.63 because that is the top of this pennant that we broke out of. We gapped. This is also an inside week play, guys. Inside week breakout. These 2 big lines are your inside week high and low. We gap up to it and just go right off the bat, right? So as far as my scale tactics on this stock, I had a little bit of a risk off level here, which was a daily high from a few days ago, as you can see. So I'm scaling here. We pull back. We hold the 9. We make another leg up. My next ideal scale is 142. The same way I had a scale target on AFRM, which I considered a psych level, 2250. On a stock like Amazon, every whole number, I'm going to look to scale at every whole number, unless I have other major levels in the way, daily, weekly levels, dark pools, or GEX. I don't really have any from the 140 all the way up to 140.63. So I got to find some places to take more profits, right? I don't expect this entire move today. This was a huge trade. So next thing I'm looking for is 142. We're holding the 9 all the way up to it. We get that. Here's your first loss of the 9 on the day. And I always talk about the EMAs. The 9 and the 20 is what I watch on the 5-minute and 10, whatever. When the 9 gives in, usually on a nice strong stock that's trending, the 20 is going to hold. So I'm still in here. We hold this 20 really well. We get a nice pop to test the high a day. So what do? I take some profit. That's my reward for being patient, for letting the trade work. I always like to take profit on retest and breaks of high a day. So I take some profit. Oof, big knife right back down. But look, it doesn't matter. We're holding the EMAs. So what am I looking for next? 143. That's my next psych. We get it up here. I'm scaling again. I'm pretty much all out of the trade. I have a few contracts left. And we're getting towards the end of the day. There's about an hour left. But man, look at that. Almost to the cent. 1 cent off. Top tick. All out. And it sells off into close. Pretty much the perfect trade. Basically made my week alone on this one trade. And, you know, I say it all the time, guys, but it only takes one. If you got proper risk management and you let your runners run and you have your targets on your chart, and you let it work, right? That's all you need. One trade a day, regardless of what type of trade it is, can help you build consistent profitability in your trading. Okay. Let's see. We're talking about gap and goes, right? This was kind of another one, sort of. Let's talk about some gap and goes. There were a couple other really great ones today. The best one of the day, I didn't even trade, and it was a layup, all right? Tesla. Tesla is an inside week. Look at all this consolidation here. Previous week's high, previous week's low. Gap way over it, okay? So it's still a gap and go target, or gap and go setup, but it's a big gap. So you got to be careful. Most likely you're going to want to play some type of pullback. So what kind of pullback do we get? Almost the perfect pullback to 260. That's where I'd be looking to add this 260 psych, where we have positive GEX. Positive GEX acts as a repellent. So when you're above it and you pull to it, it'll push price away. If we were below and we were coming up to it, it would push price away, down this way. We get the pullback and the immediate buy up and a little bit of consolidation and flag, sort of like what we saw on Amazon, just the inverse, and bump, and just the pump right through, right? Gap and go over an inside week breakout. Remember, I mentioned different types of levels: regular, daily, weekly levels, 52-week highs, all-time highs, and inside week or inside day type breakouts. Weeks even better because it's stronger, it's a longer time frame. We also had a nice one on Uber. Another example of like your daily resistance, okay? Here's this big level, 47.40 I had marked as a pivot on Uber that's kind of looking like a cup and handle that started to break out a little bit on Friday. Well, it gapped right over and opened at this daily level. Look at all this resistance here. We get over it for a couple days, we crash back in, we retest, we fail. This is a pivotal level, and we fail it there. And we gap over it today, and we just rip. So there's your gap and go right at the major level. That would have been a nice trade. I didn't trade this. You can't trade everything, guys, right? You got to have your watch list, and you hope that your setups that you're pinpointing are the ones that play out like this. But if they aren't, don't force it. Don't FOMO into something you're not prepared to trade if you don't have it charted, all right? Let's talk about some SPY and Qs. SPY and Qs, I traded to the downside mostly today. On my favorite 618 setup here. So pretty simple, guys. If you followed me for a while and you know about the fibs and the 618s, we got a nice one today on SPY and Qs. Now you're gonna say, Bill, it looks like you got in a little bit before the 618, and I did, and I'll tell you why. The way I'm building risk to reward into these fib trades lately is based on based on the dollar moves on the chart. And I'm giving myself 50 to 60, 70 cent range for a loss. And I'm looking for a $1+ win to build in 2-to-1 risk to reward into all of these 618 trades. So the fact that, I want to be stopped out if I close over the 786, the gap here between the 618 and 786 is only 35 cents. Which means I have at least 15, if not 20, 25 cents. I can get in a little early on the 618 if I want. So you can see here that we start to get within about 11 cents. I mean, I took this trade right here, getting in a little early because we had such limited range. So I could, afford to take, if this trade went against me, I can get up here and still not really be stopped out, still not hitting my 25% hard stop. And what's right here? the bear gap that we rejected earlier. So even extra potential resistance, which look how much resistance it was later, right? So I felt good about getting in a little early. I didn't have to sacrifice my risk to reward, and we got a nice flush down for a nice dollar move. These cons went about 65%, I think. 65%, maybe more. Honestly, can't remember. But it was a real smooth trade, and just the first candle, you're already nicely in profit, taking profit. On a move like that, I'll probably set a break-even stop or something and just let it work, and then we make fresh lows on the day. Good stuff, all right? There was a QQQ 618 set up later in the day. SPY had a little more relative strength, so it tested its 618 earlier. But a little later on, Qs gave a nice 618 setup. Same idea as SPY. I'm getting in a little early because we only have 44 cents between the gap here, so I can afford to get in a few cents early, and I do. And I get another nice win on the dump on the 618 there, a dollar move on the Qs, okay? Very simple. And then I start kind of looking maybe to go long again. And what I'm noticing, guys, on the 5-minute is a bit of a change of the trend. So obviously with this huge candle down, we've got an imbalance set up, and let's just draw that out. We got a bit of an imbalance set up there, and we started a trend, right? Lows, lower highs, lower lows, lower highs. But as you can see, we don't make lower low again. We actually make this high from the bottom with a higher low. And then here on this candle, we take out that last lower high. And at this point, the trend is maybe starting to flip a little bit. I've already having a great day. I'm still in Amazon runners. I've met my daily goal by a lot. I'm kind of chilling, but I'm starting to think, okay, maybe we do need to start thinking about taking a long position, and maybe we're going to fill this imbalance, right? What was my key to get in? I was very patient. I could have got in a little earlier when we were trying to make this higher low, and this base here could have entered. But look at this volume that comes in on Qs later at 10:05 Pacific. Just a huge stick. Now, VPA traders, they might say something like, well, you know, if you see this much volume, you want to see maybe a bigger candle. Yeah, maybe, but it's still a bullish engulfing candle with a wick down. And at this point, that's worth an entry to me. We've reclaimed, not that we haven't reclaimed and failed it a few times before, but we're back over 375. We have this imbalance to fill. It's worth a shot of lotto-sized calls, at least for me, to at least try to fill this imbalance and then see what happens, right? Well, what happens? We just rip into the opening range high, and more volume starts to come in. Right at opening range high. I'm taking a bunch of profit here because it's high a day, right? We've talked about this before. Then we start to flag a little bit, and we pop out of the flag. And then we come back, and we pop out of the flag again. And now there's more. They're just loading on doji candles. It's very strange. So are we in for more upward movement tomorrow on Qs? Are big money players loading positions here, getting ready for even more of a move than we got into end of day? Possibly. We'll see tomorrow. But if I see volume like this, after all these candles that are fractions of it, basically almost the same volume as your opening candle, randomly in the middle of the day, I mean, that's worth a buy for me to follow that volume. Sort of like when you see big flow orders come in on a stock. You might just want to take a speculative entry based on following the flow. I'm following the volume here. And that was the last trades I took of the day were calls into end of day off that volume and that momentum filling that fair value gap, guys. All right. So hopefully that helps. If you have any questions, leave a comment on YouTube, Twitter, DM me, whatever, and I'll help you out.